This is I'm associate professor in this department.
Morning, Mr. Jayanta, sir.
Good morning. Sir, shall we start, sir? Girish, sir?
Yeah, please.
Okay, so first of all, very much welcome to everybody from School of Media Management. So as you already know that today we are having a session with Mr. Saurab Baviskar, and the title of the session is about basics of investing and idea pitching for startup. So many students are having that ideas in their mind, but they don't know how to start. So today we are having a guest with us who is going to discuss with us about what would be the basics of investing, and if you are having your idea in your mind, how to pitch that particular idea for next 60 minutes. And the School of Media Management has arranged this session under the Institution Innovation Council. So before going further, I'll just read about the profile of our speaker today. So first of all, Saurab sir, heartily welcome from Symbiosis Skills and Professional University.
Thank you. That's
Thank you.
a really warm welcome, and I really appreciate all the initiatives from Symbiosis University as well.
Okay, thank you, sir. So, Saurab Baviskar, sir, is an inventor, investor, and visiting faculty for innovation and entrepreneurship for many of the companies and institutes. And he's also a managing partner at Nasglobe. He's also having a 10 plus years of experience in management, in business partnering, in talent acquisition, new products, and legal operations. Sir is also an active member of the Energy Institute London. So, sir is also a merit scholarship from Scotland, and hence some of our patents are pending with two consumer products patents. So, related with the patenting, related with the innovation and entrepreneurship, he is having that expertise area. Now, I request Director, School of Media Management, Dr. Girish Rangnekar, sir, to please deliver us an opening remark. Sir, please.
Yes, thanks, Dr. Sagar. Once again, warm welcome, Saurabh ji.
Thank you.
It's really important for students to know the basics of investing and pitching for startups. And I must tell you that our students have enterprising mind. Many of them have their family businesses, and many of the students are doing internships on their own.
No.
In my class, I keep emphasizing on how passion is important, burning desire for success is important, importance of generating ideas, innovations, copyrights, patents.
Yeah.
I keep discussing the case studies of Google, Amazon, Nike, Starbucks. How Starbucks was started by 3 college students. Just 3 college students, they created the empire.
Yeah.
And how it's capturing more than 60% of the coffee market.
Mm-hmm.
One man built $1 billion brand, and that's Nike. So at the beginning, everybody is aware that startup face a lot of uncertainty and lots, have high rates of failure. But we should also keep in mind some of them also become unicorns.
Yeah.
So Swiggy, Airbnb, Ola, the classic examples to quote.
Mm-hmm.
So I will not take much of your time. I will, but quickly introduce Jayanta sir, who has recently joined our School of Media Management, and his topic of PhD thesis is pertaining to startups. So I'll quickly request Jayanta sir to share his views.
Thank you very much, sir. In fact, when we teach, we also ask the students. Am I audible?
Yeah, very much.
Yes.
We also ask our students that how many of you would like to be entrepreneurs, and normally the answer we get is that we want to become entrepreneurs after a few years of working. The reason is that they say we don't know how to get the customers, how to get people, how to manage the business. But the advice we normally give them is that once you are married and you have children, then you cannot become an entrepreneur. Okay, then you have to, then you need a salary to take care of your family. So if you want to become an entrepreneur, the time is right now. And today, what Girish sir has said, my doctoral thesis is also on that. That you can adopt digital marketing platform, you can adopt digital marketing tools, and pandemic and social distancing has shown us that you don't have to go out into the market. You can sit in your laptop with internet connection, and you can set up a business and run a business. So with this, I'll request Saurabh sir to throw some light, give you some ideas, strategies, share his own experiences, which can actually motivate you. And let me just end with one line which our Honorable Prime Minister Mr. Modi also says that we not only need job seekers, we also need job creators. We need people to come up and create jobs, and for that you also have Startup India and Make in India, and a lot of policies you have which you can actually capitalize on. Thank you very much, sir, for coming, giving us your precious time. Over to you.
Thank you, sir. First of all, I'd like to thank Dr. Girish sir, Jayanta sir, and Sagar sir for availing this opportunity. And I'm really been jealous of the students because you have such great professors who are very forward thinking and they are really doing great. I mean, there are many universities who have not even started of thinking it, but at the point of Symbiosis, you are just way hard. And seriously, you're going to do a great job in the very future. So now, before you're starting, am I allowed to share the screen?
Yes, sir. You can share.
Yep. So now let's begin. With all due permission from all the respected professors, I'll just start. So the first thing is, what do you mean by startup? I mean, first, students, you have to clear one concept that starting a business is not identified as a startup. For startup, you have to have a different initiative, a different perspective, and a different methodology from the usual traditional business. Suppose if you're having a shoe business, you're selling shoes, or someone is in the construction business, okay, that is fine. That is, you can do as a freelancer, or you can have your own startup, or you can own a business sort of thing which you do for your livelihood. But that is not considered as a startup until and unless you have a different sort of a technology in it. First thing, technology is booming each and every day. There are different sectors, not only in the tech, I mean IT part, but apart in that, maybe your engineering background, or if you are in a pharmaceutical background, or you're a medical background student, it doesn't matter. So the technology, it should have a different trajectory path. It shouldn't be the normal traditional method. It doesn't matter even if you're selling your shoes, or if you're selling what do you say, any FMCG products, or you're doing anything. But if you want to sell in a different way from the usual traditional way, so you have to find something innovative marketing techniques, then it will be considered as a startup. Suppose if you talk about the second part, that is the competition. See, students, all the students, may you be a first year student, or you are an MTech student, or you are even a PhD holder, it doesn't matter. All of them have ideas, and most of them are there the great ideas. But you have to look at the market. You have to go into, first of all, you need to know what is the competition of it. uh, and apart from that, the market should be very big and prospective enough. It shouldn't be like if you're only concentrating on only one part of the story, or just only one area of the market, or do not just go on the geographical sections. Suppose if you're in Pune, so do not just focus or develop a product which is used in Pune and Mumbai as well. You should consistently and comparatively develop a product which shall be used for all the, say, scenarios, I mean in all the geographical conditions, for all the societies and all the levels of societies. I mean, starting from the lowest background to the higher class. So that is how you should technically analyze the scenario for startups as well, and whatever your idea is. See, guys, first thing is, in this session, you're going to, I'm not going to go all that deep, because then that will be a big and long session, and I don't want that, because obviously you will be bored. I'll tell you what is the technology of investing basically. What are the basics of investing, and how you can at least raise a funding for your idea. I mean, at least at your ideation stage. You do not have to make a team, you do not have to make a big company out of yourself, but even at the ideation stage, and what are the different scenes of the startup investing as well. As an investor, I myself, I have invested in more than 5 to 6 startups, and we know that what are the prospective thinking of the students, and how the students, they are analyzing the market as per their convenience or as per their learnings. But you obviously, you have to reschedule those parts, and then you have to go ahead. So, startup and the business, there is a minor difference between it. The startup is beyond, and it is on the first day it has been defined or destined to be a big from the day one, which has to be used different innovative techniques, not only for the marketing but also for the manufacturing, development, and all the theoretical parts. So now we'll move ahead. Yeah, guys, you should understand that most of the startups which come through us are 90% of the startups are not fundable. I'll tell you the reason why. First thing is, they the idea, whatever the idea you have to be a very big, and you have to think big. Always think big, so that even if you are concentrating on a smaller target, that is not going to hamper your business profits. Yes, if you just think small, it is going to be, in the long run, it is not going to show it in reflect in your balance sheet, and that is going to be a big loss for you guys only. So first thing I will tell you is always think big. And the very reason of why the 90% of the startups are not fundable is the same concept. Not only they don't have the technology, but when they have the ideas in their mind, let it be whatever the ideas they make. It might be sector agnostic, but the competition, you should be aware of the competition. I mean, you should, your product, your idea, your service, your software, whatever you have, you should have at least a unique concept which is grasping for all the sectors of the society, made from lower class, upper lower class, upper middle class, higher class, for all of them. That's what the thing is. It should have a mass appeal. I mean, only it's not like only few sections can be utilized for the startups, and not about the geographical parts as well. You do not have to just concentrate on India. Basically, this is all over the world. So make a product which will be useful for not only the in the Indian context, but also it will have a greater impact from the international countries as well. And that's the reason why the 90% of the startups are not fundable. First of all, first think big. Secondly, you should have a technology which has not been in the market. You should have a less competition. Obviously, if you open a company with already 100 companies are open in the market, so what is the use? Nothing. Yeah. But apart from that, if you set up your own startup with a different idea, with a different marketing technique, or maybe an innovative product, or maybe you have an innovative team which is doing something different, that also can be a great startup scene, and that can be fundable. But if you're starting a regular business, no, that is not. Suppose if you're selling a sports, I mean, you have a sports shop and you want to say that I want to make another sports shop, so I want to raise a funding for that. Nobody's going to give you funding for the same. Yeah, but if you have a sports shop, and now if you're using the digital marketing techniques, and you are selling your sports material outside India as well through the innovative methods, then obviously you will have a chance to at least raise a funding for your second shop. But at least you should have something innovative in the whole context. See, as an investor, I'd like to tell you that why do investor invest? What is the main reason? The only reason is to gain profits. See, investors, they do care about you, what you're doing, what is your business, and what are your ideas and all. But at the end of the day, the only thing which matters to investor is the profit. What is the return of investment you're going to give on the money which we have invested in the products, or in your startup, or in your services? See, you might have a great team, you might be doing well, you might be having $1 million revenue, but what's the use if you're not giving any stakes to the investor? Suppose if I'm investing as of now, I'll tell you, we are going to really study, have a big case study of an startup, and that will basically clear all your concept, at least in the basic parts as well. So this is the prime. I know this is a very ugly fact and all. You might be like, what is this? But this is a true concept. The investors, they only care about the profits. Obviously, they are going to share a big chunk of their holdings for your idea. So obviously, they are going to get a big refund as well, and they expect to get it. Likewise, Now we'll share a different scenario of what are the different stages of investing first, and after those stages, we will literally study scenario, the startup scenario, and how do investors and how do you, I mean, the startup founders or the students, they can literally make a lot of money through startup and through the problem solving skills, maybe the administrative skill, maybe the cognitive skills or the public speaking skills. Whatever you have at this stage, you can easily earn a lot of it. I'll show you in a very technical way. The first thing is, suppose if you have an idea, so you know what you do, obviously you're going to share your idea with your friends, your family members, and then obviously you're going to validate it with your, at least your university professors or different innovation members or the innovation departments at your universities or outside universities as well. So the first stage of any startup is that is a bootstrap funding. That is your own personal investment, or maybe you are hired some money from your friends, or you have taken a loan from your father, mother, or maybe any of your relatives as well. So this is your bootstrap funding. Then that is the first stage. Whenever investors approach you, yes, I mean you approach the investors, or even most of the time investors also approach the startups. When investors are going to approach the startup, they are obviously, they have a whole back end team which they have done their homework in a very properly manner. They have the whole team, they have got your balance sheet, they have seen your profit and loss statement, they know your tax return, GST, whatever your the fundings are. So if all the ideas whatever you have, and now if you collaboratively work on one single idea, anything that no, we should at least go and think about it, or starting an entrepreneurship, or we want to get into a entrepreneur business, or we want to get us to do a startup. So what you have to do is, first of all, do the bootstrap funding, because investor, they are going to look how much you yourself believe in your idea. I repeat, investors, they are going to look at how much you yourself you believe in your idea. Suppose you have an idea, and then you should be able to convince the investor that you are confident about this idea. Okay, when you approach the investor, it shouldn't be like, okay, I'm okay with this idea, I don't know what to do ahead. Do not be like this. I've seen a lot of examples like this. We have almost segregated around more than 100 startups, and we have been doing this for the past 4 to 5 years, at least in the investment portfolio. So we know that. So first thing is, be confident in your idea, and then the first stage, it should be the bootstrap funding. Friends, family, it doesn't matter, maybe you have a 10,000 rupees, or maybe 20,000, or maybe at least a 50,000 rupees. Take it, just do a start, because when you will get us to start your project, you will have one thing that is going to boost your confidence, and apart from that, it is also going to boost the investors confidence, or the venture capitalist, or maybe your angel investor funding as well. So this gives a scene or a sense of confidence for the investors as well. So now let's move on the next stage. Now comes the seed investment or the angel investor. See guys, seed is like, obviously now you took a loan from your family, friends, or you gave your all the personal investment, maybe your pocket money as well. And now you have, at least you have a team, you have a minimum viable product, or at least you have done some research or some market research on the ground. Okay, so when you do this sort of market research, and now when you're a bit confident about your idea, my idea is good, and people, they are really good enough with my idea, they have really liked it, and there is a chance, I'm repeating, there is a chance that people are going to pay me the money for this product, for this service. Okay, see, up till now you have done your homework, you have done your project, you have done your all the things which you have to do on your own ground network. So now comes the seed investment. In seed investment, it's most of the people like angel investor, and in this context, you can see angel investor can lack around maybe 5 lakhs to 1 crore rupees, at least in the Indian form. And these angel investors, they are going to help you to at least raise or grow your startup from the beginning. I mean, at least from the seed stage, they will use their industry contacts. They are going to use their marketing techniques, maybe the software they have been using. In today's world, the software, the technology, it really matters a lot. I mean, if you are working at least from a 5 years old background, and if you're now updated your software, then obviously you are going to be behind all the startups which are growing ahead. So the technology, it does matters a lot. And it's not like these angel investors, they have not been in your shoes. See, most, as of now, in today's what do we say, in today's context, the most of the entrepreneurs, the ex entrepreneurs or the ex founders, they are the angel investors. So they have seen, I mean, they have seen all the chances of failing of the startups, and they have also succeeded themselves. You sure? So they know what are the chances to proceed, what are the chances to exceed, and what are the chances to fail. So they are going to segregate it, and then they are going to guide you accordingly as per their own experiences, as per their own setup, and all their network as well. As you can see, these are the India's top angel investors. They have already funded more than crores and crores of rupees, but in different startups and at least in the different stages as well. Every big metropolitan city like Mumbai, Delhi, Chennai, Kolkata, they have a angel network. And if you have a single idea, they have a portal over there. You can just go down and email them. You can at least send them an email, and you can get to know the validation part of it. You can validate your idea. You can validate your project free of cost. Yes, there are startups, I mean, who takes at least 10,000 rupees, 20,000 rupees only to validate your idea. I mean, you just have to set up a call with them, and then they will speak for around 1 hour, 2 hours, and they will give you a very big validation part of your idea. But then they are going to charge you for that. Obviously, that is a good option. Obviously, if you have that much of revenue generated, or if you have that commercial, and then you can opt for that also. But at the student stage, if you think that you have an idea and you need to validate it, open this portal, submit your idea, and then you can have a easy direct conversation with these investors as well. But only your idea should be innovative, it should have some technology, and they should have a big market. Do not share them any normal business or a usual traditional business model. These guys, they are not going to entertain you. And not only because once you approach these investors, and what happens is when you're trying to approach again, you will create an image which is going to hamper you only. So do not be amateurish when, at least when interacting with these sort of investors, because these guys they are the pillar stones for your success, and they are going to help you in the long run. So now everybody in this, you must have heard about the venture capital, VC funding, limited partner, startup, profit, portfolio, everything you must have gone through it. But you must understand that apart from the next angel investors, the next stage is the venture capital. VC is like a serious money. These are the institutional investors. But one thing you have to understand that even the venture capitalists, they have their investors. Yes, even the venture, we as a student or we as a startup, you think that venture capitalists, they have the money. Once we get a VC funding, everything will be fine. We will get good crores of rupees as a funding. Okay, but fine. But even the venture capitalists, they have to raise the funding from the limited partners. Limited partners are big organization, big companies, maybe into the insurance companies, maybe in the government sector, or you're having a multinational companies. They have that funding segregated through the venture capitalist. As you can see, they have a bond, they have a limited partnership with the venture capital. And on the other hand, the venture capital, they look admittedly for the startups, the different sort of portfolio and investment, so that they can give a return to the limited partners. I hope this concept is clear that even if you have a venture capital, there those guys, they also have someone to answer, and they have their investments in route or in pipeline only to get the profits. So guys, you must understand that you are going to get the investment only and only if your idea has been technologically good enough, It's a big market, and most importantly, it should have something innovative, or it should have a less competition. I mean, you should be the first or second person to start that scenario. When Ola and Uber started, there was nothing. There were only two competitors in the Indian market for them. That's why they were so big. When this thing Zomato has been a great success story. Last week they have launched their IPO and it's a huge success. These were also main IIT students only. And what they did was, after passing out, they were doing their job, and when they get the idea, they left the job and they started the startup. But after that, they raised a lot of angel investing, and then they have also go through a round of venture capitalists as well. So you have to know that once you get through the venture capitalist, your startup is bound to be big, going big. But then you should at least have an innovative concept and a competitive advantage as well. We will talk that. I'm going to show you the real presentation, that how we used for raising funding and what we have done before. I mean, in the past.
Sorry to interrupt. If you can just, your participant list is getting overlapped on your presentation, some part of it. If you can just
Okay.
minimize that participant list from your presentation.
How do you do it? I mean,
Well, actually, sir is co-host, so it will appear.
Acha, acha. Okay.
okay. So fine. We'll just move ahead. Yeah. So now we come to the institutional investors VC funding. You know, the first thing, all the students, you must understand that there are different series A, B, C, D, but that is on a very later context. First thing is your bootstrap funding. Second is your seed investment, angel investment, and then afterwards you will land into the institutional investors. And guys, you have to understand one thing, that when you approach these investors, they have been in this business for the past 30 to 40 years. Yes, they have been funding the startups, they have been funding their own businesses, they have funded the companies in the outside international countries as well. So when you are approaching such a institutional investors, be sure about your idea, be sure about your project. I have seen a lot of examples, even when the startups they reach up till the institutional funding or maybe the series A round, they don't have clarity on what happens in their startup at the ground stage. I'm not talking about the top management level, but at the ground stage. You should be aware that what your sales and development people are doing, what is their mentality, what is their mindset, how are they going to benefit your company or your startup. A startup founder, they should know all these concepts. I won't go into a lot of technicalities because that it will be a very day long session, but at least I'll tell you that be very confident and sure about this, because not all, but at least a few startups, they are not really good about whatever the core basics are. So you can see that somewhere in India, you can see a Series A round across 5 to 25 crores, Series B 30, 75 crores, and Series C. Nowadays, it's a bit different. I mean, you can see a big portfolio of around in Series C around 300 crores and 400 crores. That is in much normal, at least in the IT sector as well as in the tech part. These are few of the institutional investors VC funding in India. Maybe it's a Bloom Capital, Sequoia Capital, Kalari, Excel. I was related with Kalari, Excel, and Elevation myself. And these are, I mean, students, they should know, but what are the VC funding as well. And you should be aware of how are the investing portfolio works. Okay. So now we will take a case study, and then you will get to know how you're going to approve or how the startup concept or how this investing portfolio works. I'll just give you a simple sharing. I'm not going to go into the technicalities. So first of all, let's enter that this is a Rahul. Maybe he's a Symbiosis student only, and he has an idea. He has a startup idea. Okay. So now, first thing is he has a idea and he bootstrapped the funding. he has his personal investment, or he took a loan from his father, mother, or from any from his relative. So he approached and he got 1 lakh rupees. But now what happens is he requires 2 lakh rupees for at least in the initial stage. So what he's going to do is he is going to approach an investor, which is in this case he has shared the presentation, he has shared what are his future plans, what are his actions, and what he's going to do. So now what happens is when he approaches an investor, the investor is fine and is looking good enough and fine, well, happy to execute his idea as well. So now consider this investor as it might be his friend or a colleague or someone in his known vicinity only. Okay, so students understand this part. First thing, he needed 2 lakh rupees for starting. He bootstrapped his own funding. Maybe he has taken it from parents. He got 1 lakh rupees. Another say 1 lakh rupees he received from a first investor. Maybe it was a normal investor only. Consider it me as only. And then he got 1 lakh rupees. So now 1 lakh rupees he himself he has taken from his parents, and another 1 lakh rupees he has got from the investor. So now let's consider this is a just hypothetical scenario, but I'm just showing you, making you understand how the investing concepts work. So from in 1st Jan, you consider as a 2021, 50% of the shares or 50% holder for Rahul for 1 lakh rupees is only Mr. Rahul only. I'm telling you, I'll tell you later why I'm telling you all this. Now, 1 lakh rupees which was given by myself, so I'm also a holder at least for a 50%. Okay, so 1 lakh rupees by Rahul and 1 lakh rupees by me. So now the startup is valued at 2 lakh rupees. Okay, I hope at least this much is clear up till now. Now, this is the I'll tell students to at least concentrate on this part later. What happens is after 6 months of the startup, after 6 months of their idea, they think that they have to grow and they need a big funding, or then they are going to they need to expand their idea, they need to expand their business. So here what will happen is after 6 months of time, they are going to approach an angel investor. He's a big guy. Okay. So once they approach the angel investor, they are going to show the presentation, they will tell them how. I'll tell you in the later part how do you pitch and how do you raise the funding as well. So now what you're going to do is they will approach the angel investor, and very conservatively he liked the idea as well. Okay. Now after carefully validation and scrutinizing the startup idea, the angel investor is very happy to promote the startup, to help the startup, to grow the startup, and he is consistently going to grow himself as well. So I'll tell you how. Now the angel investor he has approved or given 10 lakh rupees for the startup which you created, and for that 10 lakh rupees he is going to take a 20% stake in the startup. Okay. So guys, see one thing you need to understand. First, Rahul, he approached his parents, he got 1 lakh rupees. Second, he approached me, he took another 1 lakh rupees. 50% shareholder for Rahul, 50% shareholder for myself. Now we both approached an angel investor. And angel investor promised us that he is going to pay us 10 lakh rupees, and for that he is going to take a 20% stake in your startup. Okay, I hope I'm very clear and concise enough, at least at this point, because the next point is going to be a very cognitive point for all of you. So now, as of now, 1st of July 2021, 40%, I'm having a 40% stake in the startup. Rahul, who was the founder, he also has a 40% stake. Usually it was 50% at first, but now 10% from myself and 10% from the founder has been transferred as a 20% to the angel investor. And this angel investor, he believes in us. He believes in our idea, he believes in our project, and he believes that we are a good team and we can make this product a successful. Why? Because he is expecting a more return listen to this very carefully, because the angel investor is at least he's expecting a more return than your bank FD, than your mutual funds, and obviously then from your shares as well, maybe in the stock market. You have to understand, I myself have been an investor. I have been to a lot of, I have my colleagues, friends, and as well in the startup scenario only. So guys, one thing you have to do is, investors, they are going to think about the rate of return and return on interest. Yes, the interest, it should not be comparatively good enough with the banks, or maybe with the mutual funds, or maybe with the stocks. No, you have, the investor is only going to invest when he thinks that this idea is going to big, and it's going to be a very big I mean very big business startup afterwards. But the end, the last stage is the IPO. I didn't mention about the IPO, but then that's going to be a technical concept. Anyways, at least now you are clear. 40% stake is of the founder, 40% stake is of mine, and 20% is of the angel investor. Now, this is a very important slide for this presentation. I mean, you can this here to summarize up the whole presentation is on this slide only. See, guys, 1st of January in the 2021, the valuation was 2 lakh rupees, right? Rahul was a founder, 50%. He had stakes in his 1 lakh rupees was for himself. Saurab, on the my side, on the contrary part, I also gave him 1 lakh rupees. Okay, but after 6 months, that is on 1st of July 2021, the valuation of the same startup, which was 2 lakh rupees 6 months before, has been to 50 lakh rupees. That's, I'll show you how. The angel investor, he has invested 10 lakh rupees for 20% stake in your startup. Okay, so for 20% stake, he has invested 10 lakh rupees. So ultimately, what happens is the valuation of your startup increases from maybe you're the lowest stage, and for 20% it is 10 lakh. So what is going to be for the 100%? 100% is obviously going to be 50 lakhs. I hope this is clear. I'll repeat again. For 20%, the investor invested 10 lakh rupees, and now the overall valuation of your startup is 50 lakhs. Suppose if the investor would have invested only 5 lakh rupees, the overall valuation of your startup would have been 25 lakhs. I hope this is clear. So now what happens is, see, 6 months prior to this stage, Rahul, 50% founder, he invested only 1 lakh rupees. But today, after 6 months only working on this idea, his startup, his valuation has been increased to 20 lakh rupees. Why? Because he has raised the funding from the angel investor. And that is, guys, this is the real concept, how these startups like Ola, Uber, Zomato, Flipkart, how they have been a $1 billion startup. $1 billion means more than 5,000 crores, 7,000 crores. How are they valued as such? You know, guys, Zoom, it started only a few years back, and because of the pandemic, this has been a big company. I mean, most of the countries, the aviation sector, Zoom is bigger than the aviation sector in some countries. Yes, that is how the valuation works, and that is how you can put it. Now you will say, okay, sir, this is good, very good. We are very fine. The valuation has been becoming 50 lakhs. So what is the use of it? What am I going to do with it? Fine, I'll tell you. Suppose if I need a loan, or I'm having a medical emergency, or I want to invest in another startup. Okay, may consider this as a hypothetical scenario. What I will do is I'll go to the banks, or I'll approach another investor, or a friend of mine, or a colleague of mine, and I will tell them that I want to dilute my share. I need money and I want to sell some shares of the startup. So now, listen to me carefully. 1st of January, what we did was I invested only 1 lakh rupees. Okay, but on 1st of July, or maybe you can consider on 1st of August, the same 1 lakh rupees invested has a market value of 20 lakh rupees. So now, if I want some money for maybe it for my personal reason of medical emergency, or maybe I want to invest in a new startup, or I want to start a new business, what I'll do is I'll go to the bank or I'll go to the investor and I tell them that I need money, but at this valuation, you have to give me the money at this valuation only, because this, there are a lot of technicalities. There is a pre-money valuation, there is a post-money valuation, there are the shares dilution part. I'm not going to all that it, because then this will be an investment management or an investment banking session. So at least you must consider that, at least for this scenario, you can use the valuation money for raising a loan or for starting another business as well. So guys, understand this thing. This is a very critical concept and this is going to help you in the long run. I hope this is very clear. Now, what happens is after 6 months of your startup, Rahul, the founder, he invested 1 lakh rupees on 1st of January. Saurabh, myself, also invested 1 lakh rupees. Now the valuation has been 20 lakhs for him, 20 lakhs for me. And the investor, he is also going to have a 10 lakh rupees for a 20% stake. Now the same thing, if suppose if we want to raise a more funding, what we are going to do is we are going to approach a venture capitalist, and the same scenario is going to be implemented at the venture capitalist as well. And even if suppose a venture capitalist has invested 1 crore rupees for a 20% stake in our startup, the valuation of our startup is going to be 5 crores. How much? Because 20% for 1 crore, so 100% is equal to 5 crores. So now, as per the scenario, as per the market, if you consider the same thing, the 40% now is going to be a very big amount. It is going to be approximate 2 crore rupees for a 40% share. I mean, that is how the startups, that is how the founders as well, or else you as an entrepreneur, you are going to make a lot of money. But guys, friends, students, you should understand one thing. This is not a get rich quick scheme. I repeat, this is not a get rich quick scheme. You are going to give your blood, sweat, tears, patience, everything, and then only you can see. Guys, this is just a formal example. I have seen startups which have raised a funding of more than 10, 20 crores, 30 crores within a time span of 30 to 40 months. So this is just a scenario, and because most of the students they are passing through this, so I'll tell you how the cases works in the investment portfolio. See guys, my expertise is investment and the finance background, so I can very easily relate to you, and this is what the concept is. I hope I'm very clear enough. Now just to move ahead, those of you who are not aware what Shark Tank is, Shark Tank is a American popular TV show. It's a reality show, and where startup entrepreneurs, or maybe you have a new idea, maybe you're an investor, they go and pitch their ideas to the investor panel. The investor panel, there are a lot of investors over there, and the panel is going to judge you. They are going to decide on your patterns or your ideas as well. So whoever are interested, the Shark Tank, it's launching the first series in India. To be very good enough, you must have seen that show like Kaun Banega Karodpati or Indian Idol. So basically, this is an Indian Idol for entrepreneurs and startups. So any of the students, any of the professors, or any of the faculty members who have their idea or they want to register for this event, you can just go. You have to go through the audition part, and that audition is not a music audition or something. That is going to be an entrepreneurial audition, which will be carried by few venture capitalists and the angel investors. So if anyone from the students or the staff can go and register it. I think the registered date has gone, but for the next season, you can obviously go through the same. Yeah. So now I hope this is a good enough clear. And I think, can I take 15, 20 minutes more, right? Jain sir or Girish sir?
Yes, yes. Sir, please continue.
Yeah, very much.
Yeah. No, actually, I got big. I mean, I take a long part on investing only. So I left with pitching, startup pitching.
It's very interesting. Please go.
Yeah, yeah. I'll take only 15 minutes only, not more.
Sure.
See, so one thing is like when you are approaching an investor or when you're going to pitch your idea, you have to understand one thing. Be very confirm and firm with your mindset. See, never forget what you are approaching the investor for. You are only approaching for the benefits, your own benefits and the investor's benefit. So it has to be a mutually cohesive relationship. Yes, it has to be a mutually cohesive relationship. It's not only from a one side, it's not a single sided love story, or it's not a one sided love or nothing like that. It's going to be a dual relationship. So you have to approach the investors, or investors will approach you. It's either the scenario. You have to help the investors, and the investors are going to help you. You're going to help the investors to raise the profit, and the investors are going to help you how to raise the profit, how their influence, how their scenario, how their friends, colleagues in the relation, they are going to help you to grow your business. See, guys, not all the ideas, you have 100 ideas in your mind, not all the ideas are going to be great, successful enough. So, testing quickly is a really big and a good thing. Uh, Fail early, fail fast, try early, try fast. There are many quotes on this. But just understand one thing, do not just, even if you have been a failure, do not just brag on your failure, or do not just extravagate it. Just go, I failed, I know what to do, I have nothing to do, and don't do like this. If you have failed, okay, fine, good. Investors, we don't care what are your failures or what is it. The only thing we care is how are your project, and how is your idea, how you're going to implement it, and are you really capable and motivated enough for do this idea. So now it is not about, last thing is, it's not about your what do you say, the any contemporary idea. It's all about the benefits which you are going to provide. We'll go on. Maybe I could share you a small video on this. Yep. There's a YouTube video. I want, before I start the in pitching session, I want all of the students or the faculty members to see how the pitching, or how the differences. I mean, what are the consequences which you can face when you are not pitching in a proper manner, or whom do you share your idea with, or how are you going to deal with the ideas. So I'll share you a small video. It's a YouTube video. I don't know, you must have seen this. Maybe this is a good part. Yep. Is the screen visible enough? I mean, anyone can reply. I mean,
Yeah.
sure. So, students, I request you to just look at this, and you will get to know the basic concept. Don't worry, this is not a boring video. It's a nice, good video.
I wonder if you can just minimize the participant list. We are seeing your face twice. Yeah, that's it.
Okay.
Yeah, perfecto. Thanks.
I hope this is audible enough.
We can see PDF, sir, not video.
Maybe I should see. Yep. Now only you can see the mindset on. I mean.
We are on the mindset. What a PDF.
Now is it visible?
No, sir.
Just.
Yeah, you unshare and then share.
I'll just share this. Yeah. Is this good enough?
Yes.
Yeah. So now just start. So guys, understand one thing. This video is not. This is a funny video, but you are going to learn the very minute differences on pitching, and also as well as intellectual property and the patent part. What are the consequences if you are not going to save your idea? First thing, what are the consequences that you are not going to save your idea, and what are the consequences you are going to face when you approach to the investors in a wrong manner, or you do not know whom to approach and how to approach. So this video will clear your concept on whom to approach and how to approach. I'll tell you in the future further slides.
Video we cannot listen.
Sorry?
Video, voice.
Voice.
Because whenever you are sharing through Zoom, there is one option called share sound.
To where it is, I mean, sorry. Share sound. Okay.
Now you are sharing,
Mm-hmm.
that share sound option will come at sharing screen.
Yeah, got it. Share sound.
Yeah. Yeah, now we can listen.
Yeah. So just go on and this is good enough to share the basic or the core part. We do share this video to most of the startups in whatever we are consulting on. Now how do I share my screen back? Should I stop sharing? Yes. Yeah. Yep. Is the screen visible now? I mean, anybody can refer?
Yes, sir, that my screen is visible.
Okay. Sure. So now you must have understood one thing from this video. Even if it's your idea, even if it's your own project, it's your own startup, it is very important whom do you present, how do you present, and what are the tactics behind it. In that video, the original person, the joke who was referred to, it was somebody else. But maybe he didn't have, I mean, that this video is also good for intellectual property as well, because that is a different part, patents, trademarks, and all. I'm not going to cover in this scenario. Yeah. So when you are pitching to the investors, you have to be very cognitive and very directly for the investing scenario. See, tell them what is the problem you have already raised, got a problem, you're solving it, and now what you're doing is you're getting a solution. So give them a direct way so that they can understand what the solution is about. What is your startup going to do? Here you can see that this is a emission product. You can see the black smoke or the fugitives coming out of this, and the innovation or whatever the technology which we have developed, what we are going to do is we are going to make a clean technology, a green technology that is not going to give you the pollution coming smokes and all this kind of flames, or there's carbon dioxide or carbon monoxide, these CO2 gases coming out of. So this is going to bring the environment to a positive impact. So be very well enough with the startups. These are the actual slides taken from our own presentations, which our students or which we are investors, they have done. So I'm going to give you a real scenario. What are the slides which you present to the investors, or whatever you can do with the startup scenarios as well. If you're working in a cognitive environment, even if you're a library or anything in a scenario, you get to know about the idea, or you increase yourself, or you make a team or something, or you collaborate with someone and just you go and work with your idea. So when your idea, describe while you're pitching your, describe the team, describe who you are, what you have done, and what is your capability of. I mean, what you are capable of, what is your capability to do, and what you're going to do, what your achievements. So this not you're not going to give them a big report or something. Just mention down in a one single slide. That's all. The third most thing which you have to be consistent on is the target customers. Who are your going to be the target customers? You have a problem, fine. You have a solution, fine. You have raised the funding at a bootstrap the funding. You got a angel investor funding, fine. But now you have to grow big, so you need a big list of customers, or you need a big audience. Okay. So now in this context, tell them who are your target customers. Do not just brag about it. Be very frank with them, and while pitching, only tell them what are the customers. Maybe they are a short set of customers, or maybe you have a big list of customers. Just customize it, or just fragment it into different segments and just show them channels. How you are going to be separate the customer, for which I said in starting only, I said that each and every society, I mean every level of the society, maybe you're a lower class, middle class, upper middle class, higher class, every sections of the society, your startups or your idea, it should be validated with, and it should have a big market. That's how the scenario is. And apart from that, if you want to go and you have a prototype or you have a valid idea, so what you do is you do not have a funding. Suppose if you talk about the case of the Rahul, which we have done a case study of, Rahul had the capability or ability to at least take 1 lakh rupees from his parents. Also, he tried to convince me, and I also invested in the product. But now, what happened? There are few students, or there are few startup founders which they do not know how to raise the funding, or basically they don't have that much source. So these are the websites such as a crowdfunding websites. So what this website they are going to do is, you have to upload your idea, your project on these websites, and these websites, they have a huge base, customer base. They are going to donate you, or they're going to invest in your product and ideas. I'll show you a real scenario like this. This is a fuel a dream. This is also a startup, Indian startup only. So what they are doing is, suppose if you have a product, if you have an idea, or if you want to raise a campaign, what you're going to do is, you create some pictures, you go and upload your data on the software. I mean the fuel a dream software. Mention what are your plans, who is your team, what are they going to do about it, and then you give them a set target. Like you can see, this is a Bangalore foundation, and they have raised a target of 17 lakh 45,000 rupees, and up till now they have raised a 2 lakh 60,000 rupees. So you can see this is a Pune based campaign. They have raised a funding of 2 lakh 64,000. I mean their target is 2 lakh 64, but they have raised a 1 lakh 64,000. So even if you don't have a lot of funding, or even if you don't have a big experience as well, it doesn't matter. Just go and upload your idea on these platforms, and not only these platforms are going to help you validate your idea, but even if suppose there will be few students who will be saying, no sir, I have to do a job, or I want to do a I want to go to a foreign university and study, and I want to settle over there only. Fine. See, I myself, I have been a scholarship student by the United Kingdom government. During when I approached for them for the masters, I was a scholarship student. So I know what are the consequences when you are not focusing on the innovation room. You know, the innovation room is very, very important to all the multinational companies, to all the developed countries as well. And when you are going to mention all these things in your portfolio, trust me guys, I myself, I'm a scholarship student, I can tell you this is going to help you at least for a scholarship, and not only for scholarship but also for your placement and job interviews as well. Because nowadays, to be very frank, we are in the ground, we are on the network as well, so we know that the pipeline has been gone rough, and people, they are obviously looking for more and more startups or a new innovative products. Indiegogo, this is an international website. You have any product of yours, if you want to do any service, just go and mention your product, mention your team, upload the photos, upload your all the scenario, what you have done and what you are going to do in the very future. Just go and upload it. You can see, guys, they have literally raised lakhs of rupees. If you see this audio set, nothing. He's an engineering student only. What he has done is he has raised almost 1 million Hong Kong dollars. That is almost more than 60 to 70 lakh rupees. This is 1 lakh US dollars. That is almost, no, sorry, this is almost in crores. Sorry. Mhm. The 1 lakh dollars, that is almost around 70 to 80 lakh rupees as per the today's scenario. This guy, they have raised a funding of more than 3 to 4 crore rupees. So this is how the power of crowdfunding is. But this is not investing, guys. This is not an investor. This is not a venture capitalist. This is not an angel investor. This is a completely different scenario. I'm not going to go into all the technicalities. Revenue model. So when you're going to pitch, your revenue model is going to, how are you going to make your money? How are you going to make a living out of it? You have an idea, well, very good enough, fine. You have a solution to it, but how are you going to make a living out of it? How are you going to support your family? How are you going to support your uh, fellow members, your colleagues? How are you going to pay the salary? So investors, they should know that even if we are funding you, it shouldn't be like that you are raising yourself on our own funding. You do not have any base or own of yourself. So this is a revenue model which you have to mention in your every pitch presentation. Do not just go bare on the side. If you do not mention the revenue model, I am 110% sure you're not going to be selected from the further rounds of investment as well. Cost is a very it's not a basic or important slide, but that is a very ultimate thing. You have to mention the cost, what have you developed, what have you invested, and what are your future projections as well. How much is your bank loan, what are the bootstrap funding, what are the fundings which are used for the product, how many members you have in your team, what are the colleagues, what are the salary. Mention it in a pie chart or maybe in a different table format, but do consider this side while pitching your product or pitching your investment as well. The key metrics, there are different metrics for different startups, how you're going to measure it, and what are the turnover you have achieved, what are the key achievements which you have done, and how you are going to make and grow the big achievements as well. So do concentrate on that as well. As I said, tools to copyright your own products or ideas, copyright, trademarks, patent, there are different utilities. There are patent as well. Won't go into much that deeper context because then it will be a very day long. Yeah, this is a very cool concept. Guys, there are a lot of companies which are accepting the outside innovations as well and your new products and the new ideas. So even if you are pitching your idea to the investor, before that, prior to those ideas, do one thing, do and go approach these companies. They have a portal. You just go to log and png procter and gambler or g, they have an open innovation portal. In that open innovation portal, you can just go and just submit your ideas. What will happen is when you submit your idea to them, you will get a validation part. At least when you approach the investor will have a little bit of confidence that no, this guy, he has really done his homework and he's trying to grow big with the company. And when there are validation, it's coming from a big multinational institutions like Unilever, Procter and Gamble, GE. It is going to make a big impact while investing portfolio. It doesn't matter. Maybe you are in the IT sector, or maybe you are into different companies like chemical engineer, mechanical engineer, or you have a management background, or you're into medical, pharmacy, dentistry, anything. These companies, they are have getting or they are comparing themselves to the other multinational developed companies also, and guys, trust me, they are literally accepting the open innovation part. So even if you are not raised any funding, even if you only at the ideation stage, just go and log into these portals. Maybe it be Philips or a Samsung, they have an open innovation portal. Just submit your idea, but that you have to do through a professional manner. It's not like you go and call them, hey man, I have an idea, now what? No, they are not going to entertain you, nothing. So do it in a professional manner, but that is a completely different curriculum. Suppose if you want to do that, who do you call to? Product managers, brand managers, innovation department, new product department. See, what will happen is when you're going to approach the investors, or even if you're going to pitch your product to your own university professors, or maybe someone in your family, you have to give them a reference, or that is a very strong, valid point whom they are going to trust. If you tell them that I have spoken with the product managers or the brand managers in Procter and Gamble or GE or Nivea or Samsung, you have to give their reference, give their name, and then the consolidation part or the validation part of your idea of your startup, that is going to range to a big amount. I mean, that is going to take a big jump. But only submit your ideas to these personals in the industry, but with a professional manner. Don't be amateurish in your submission. This is anything product which you can say how would you develop it, or basically how do you present your product to the companies. If you have a prototype, send them a prototype. Do not make a big prototype. I'll tell all the founders who are the I'm consulting them, do not just make a, what people do is they make a prototype first, and when they got an idea, no, don't make a prototype at the first stage. Go at least have a crowdfunding round, at least get to know to the companies, or at least go to the in a bootstrap stage, and then get the reviews. then only you try to make a big prototype out of it. Until then, this is just a graphic image. This is not even a real prototype. This is a virtual prototype. And with the same prototype, I have dealt with more than 50 companies all around the globe and all the top multinationals. So if I can do this, also you can also do the same. Do not just make a prototype. Whenever you are investing or whenever you are pitching, in both the cases, either the cases, at least have some relation with the companies as well. As I said, to mention the ideas, companies actually open innovation. If the companies like your idea, what they are going to do is only at the ideation stage. Students understand one thing, that only at the ideation stage, these companies, they are going to support you. And once these companies support your idea, you do not need a venture capitalist funding, you do not need any angel investor, because they themselves, they are going to invest in your idea. So uh, show the investors while pitching that what the company contacts you have developed and what are the contrary part which you have done. This is before investment round. This is what we have done with them. I myself, I have done with the companies, and this is just an NDA agreement with them. So at least the investor, they get a sense of motion or their confidence, or they will trust you. That's what the main scenario is. Show them the reply by made by Crompton Graves or Whirlpool. These are all the companies which I am dealing with. But in your case, you will have IT companies or tech companies, or maybe you are a dentistry or in the medical sector. Show them the reply. Show them at least something which will validate your idea. Then only maybe even if you're showing your idea to your professor or university professor, or maybe Sagar sir, Jevan sir, or maybe Girish sir as well, show them that you have done at least your homework properly. At least you have done something on your own. This, even then, even if you try to convince your own professor, that will be a really great thing, because then they are going to help you in the very long run. And I'll conclude in 10 minutes. Two main elements. Whenever you are approaching in your pitch presentation, okay, leave about the pitch presentation. Even when you're doing it in your own projects, I mean your university project presentation, you should have the ability to convince the external panel or the internal members as well. Consider them as well as that. Whatever your university professors are, treat them, I mean, look from their perspective as a investing portfolio, and try to convince them for your idea. So use this. First, try to intrigue your project, give them a mystery, make us a little bit of suspense, and create an interest. I mean, how this can happen? What is the technology behind it? Suppose if you create a product and that is going to help hundreds of customers, so you'll be like, how you can help hundreds of customers in one scenario? I mean, with how one product can help all of them. So create some mystery like that, and then you can see the real benefits of your own idea, and apart from your own idea, other ideas as well. This is the last conundrum. Show them a 18-month plan. What is the future? What are your future projections, and what are your future options for your idea, and how are you going to move ahead with your idea? Do not tell them what you have done in the past. Okay. See, the investors know what you have already done in the past. That's the reason why they are seeing your, or they are listening to your pitch or presentation. The investors know very well. They want to know what you are going to do with your money, with us money. So do not just tell them about the past and present. No, tell them about the future, how you are going to utilize the money which we have provided to you, and what are the expectations, and how are you going to make a return out of it. So that are the future projections as well. And at the last, I would have to say that lean canvas model. I don't know how many of you are aware of a lean canvas. There is a whole book on a lean canvas startup. There's a, each and every angel investor, institutional investor, or a venture funding, you have to submit this lean canvas model. So even if you are a small startup, even if you're a big startup, or you're a multi-billionaire startup, lean canvas model is the primary thing which all the startups you have to do. So I'll tell all the guys, I want to emphasize more on this, because then that will be a very long session. But trust me, always and always mention lean canvas model in your pitch presentation, because this is going to make you separate from all the other students. Most of the students presentation or the startup presentation, they do not even know what the lean canvas is. So try to emphasize and try to just grasp your knowledge on what is the lean canvas model. This is going to really help you in the long run. Even if you want to do a job, just go and learn the lean canvas model, because it is going to be applicable in all the projects. I mean, not only your individual project, but even the company's project as well. So I will recommend students to learn the lean canvas model. And it is not a very big rocket science or something. You can easily learn that. And with this, I would like to uh, end the presentation. And at least I'll say that make companies work for you. You know, I don't have a problem for you working for a company. Obviously, if you're fine, you're working for a 9 to 5 job, well, good enough. But even if you are working from a 9 to 5 job, you can create employment for others, for your own people, for someone in your vicinity or anyone in your known person. So make companies work for you rather than you working for a company. And that's how we are going to move ourselves to a $5 trillion economy. That's what our Honorable Prime Minister, Mr. Narendra Modi, has promised for all the beloved citizens of India. And that is only going to be one way, that is for startups. And with this, I'd like to thank you for being such a great audience. And I hope I haven't bragged much, but that was okay. I mean, that was a good, at least for the investing part. So all over to you guys.
Thank you very much, Saurabh sir. It was a very detailed presentation. In fact, there are two ways of becoming an entrepreneur. You can you can start in an unstructured manner, and that's probably the reason why 90% of entrepreneurship ventures fail. Or you can take a structured approach, which Saurabh sir has shown with the lean canvas model, and that you take a structured approach, and then your chances of success increases.
Yeah.
So this was a very detailed one where he has given, or he has actually tried to give all the nuts and bolts of entrepreneurship in this session. I hope all of you have noted down his email ID, which is there on the screen. So please note down his email ID, because you might not need him today, but one day when the thought comes in your mind that I don't like my job, maybe I should become an entrepreneur. And that day, definitely, you will remember Saurav sir, what he spoke about today. And what he said is very important. I emphasized it on before also, that we not only need job seekers, we also need job creators. Okay, and if you want to become a job creator, there is a whole ecosystem which can help you. Okay, you have got your faculty members, you have got consultants like Saurabh sir, you have got incubators, you have got government mechanisms, you have got a whole universe which is there, which you can tap into, and we are all there to support you. What you need is a brilliant idea, an exciting idea, okay, and of course a feasible idea, okay, which can be implemented. Thank you very much, sir, and thanks to everyone for participating. And this was a great knowledge enhancing session. So I also thank Girish sir and Sagar sir, who has organized this whole thing and taken the pain. So we need more such sessions, in fact. So in future also, we would like to invite Saurabh sir to come again and interact with our future batches to give them the such kind of value-added knowledge. Thank you very much, sir.
Yes, very much. Really look forward to your such sessions. I mean, actually, we could have incorporated questions and answers, but students, they have to get into the next class, which is lined up at 1 o'clock.
Okay, so sorry, I just exceeded by 20 minutes. I'm really apologize to all
No,
of
no,
you.
no, you are welcome.
That was discussion and session. So,
Yeah.
yeah, thanks once again.
Thank you,
Thank
sir.
you. Thank you.
Thank you all.
Thank you.
Thank you, sir. Thank you. Yeah.
Thank you. I'll just take a leave now. Sure.
Yeah, yes, sir. Thank you.
Sir, we'll speak afterwards. Sir.
Yes, sir. Yes, sir.
Thank
Sure,
you,
sir.
Jan, sir.
Thank you.
Thank
Yeah.
you.